This is what sets the stage for the next bull market, right? Supply gets so constrained, gets so tight that all of a sudden, a small amount of capital flows in and Bitcoin can do nothing but just go up. And you can kind of see that, that long-term holder supply draws down into these parabolic bull markets. What's that saying? Well, you stack for 3 years Bitcoin 5X's, you take a little bit off the top. That makes sense, right? The ETFs, right? Some people have different opinions on them. They're coming. They're definitely coming, right? Larry Fink, all of them. BlackRock, iShares, Vanguard, they're coming. The investment banks, there will be Bitcoin ETF.
The total global financial assets in the world are 900 trillion US dollars. Okay, 900 trillion. That includes 400 trillion of debt, 300 trillion of global real estate. Okay, that's 700 trillion. 100 trillion of global equities and 100 trillion of other assets.
The narrative of, BlackRock's ETFs are coming, the suits are coming, kind of was said last cycle, but I think this time is going to be kind of another order of magnitude larger whenever that time frame comes. And the good, the bad, and the inevitability of it all. Is it a bad thing that Larry Fink and the boys from Wall Street are going to come into Bitcoin? Well, we don't really have a say. Bitcoin's permissionless, but I guess how do we think of that all? All right, so this first chart's pretty obvious. Just drawdown for Bitcoin all-time high. Bitcoin notoriously volatile, right? That's kind of one of the main talking points of skeptics is how volatile it is, right? Okay. Here's Bitcoin's price, realized price. What is realized price? You can also think of it as like market cap and market realized cap. It's essentially like the realized market cap of Bitcoin would just be all of the supply at the price it last moved, whereas a market cap is just the circulating supply multiplied by the price it last moved. So realized price is just the average cost basis of all Bitcoin. It's the price at whichever UTXO last moved, valued at that price instead of just the current exchange rate, right? And so what you notice is it's a lot less volatile and it's kind of just going up in this lockstep fashion. So here we have those two same data points and MVRV score. What the heck is that? Market value to realized value. It's just a ratio of the two. Standardized. It's a z-score kind of layered on top of that. And you can kind of see a really distinct boom and bust cycle, right? We can all intuitively feel Bitcoin's boom and bust cycle. You can, whenever you open up a linear chart of Bitcoin, it's either a massive bubble or it's dead. And there's basically no in between. Well, this is kind of contextualizing what's happening here, right? The interplay between that average investor cost basis that really doesn't draw down all that much and kind of moves up in exponential fashion in a bull market versus, the hyper volatile day-to-day exchange rate of Bitcoin. Okay. So here is the 1 year realized volatility of Bitcoin. It's annualized volatility, 1 year basis, and the realized price annualized volatility. How much it's fluctuating is a lot lower than Bitcoin, right? So Bitcoin is hyper volatile, that's a big narrative. Bitcoin's 80% down from all-time highs at 15,000, after FTX collapse, down from the high of 69,000. But like those metrics, those kind of, eye-grabbing mainstream media stats aren't really indicative of reality, right? Like not everybody, barely any Bitcoin moved at 69,000, right? It's just like, it wicked up there, it wicked down. There wasn't really that much like capitalization at that point, right? And so we can kind of see with this average cost basis what's actually happening. Bitcoin's not that volatile, on average for all the users in the network, that cost basis. It's just the mark-to-market exchange rate. So that's these same stats, but the drawdown from all-time highs, right? Bitcoin, again, the narrative is like, it's so volatile, no one could ever touch it. It's a misrepresentation of what's actually happening underneath the surface. So the exchange rate, boom and bust, minus 70%, minus 80%, keeps on happening. The realized price, that average price, that drawdown from its all-time high, it basically only ever goes below, 20% maybe. So that kind of like, you can think of the realized cap metric, that realized price, average price of all Bitcoins are like, it's not a perfect measure, but like every Bitcoin valued at the price it last moved is a pretty good measure of like, the vitality of the network, right? It's far better than actually just, multiplying the circulating supply by the price, which is how a traditional like equity market cap would be calculated, right? So with Bitcoin, we have a really transparent UTXO set, transparent supply, so we can do some, cool things with it. So here is the realized cap, the 90-day percentage change, right? and without the exchange rate layered on top of it, just the realized price, right? And so again, far less volatile than the daily exchange rate, and it's showing that 90-day percentage change. And what you can notice, right, is really diminishing returns here, right? And so, I mean, it makes sense. It's a lot easier to pump Bitcoin at $1 than it is $10,000 or $100,000 if we get there one day.
I mentioned that I calculate the intrinsic value of Bitcoin using credit default swap spreads. And that's a dynamic intrinsic value calculation. And that calculation says Bitcoin is worth about 250,000 US dollars the last time I ran it per Bitcoin. So it's trading at 1/10 of its intrinsic value compared to credit default swaps. So it's cheap on that metric. But here's another way that I set a price target, not a time and target, just a price target on Bitcoin. The total global financial assets in the world are 900 trillion US dollars. Okay, 900 trillion. That includes 400 trillion of debt, 300 trillion of global real estate. Okay, that's 700 trillion. 100 trillion of global equities, and 100 trillion of other assets like commodities, currencies, gold, fine art. It's all in there. So 400, 300, 100, 100. That's 900 trillion US dollars of global financial assets. Notice that debt is the biggest one. And I'm saying this. I believe that Bitcoin is the apex predator, which means Bitcoin will capture a portion of all those financial assets. Not 100%, but I'm going to say it captures 5%. Subjective, but that's an opinion, 5%. Well, what's 5% of 900 trillion in today's dollars? 5% of 900 trillion is 45 trillion US dollars. What is 45 trillion divided by 21 million? That's the fixed supply of Bitcoin. And yes, some Bitcoin coins have been lost, but it doesn't matter. Let's use the total supply, 21 million. It's over 2 million US dollars per Bitcoin. If Bitcoin captures 5% of the total addressable market in today's dollars. So at 5% penetration, Bitcoin's worth over 2 million US dollars. Today's dollars, again, not in 20 years, in today's dollars, Bitcoin's worth over 2 million per Bitcoin. It's trading at 30,000, which is saying that the market is giving me a 1.5% chance that my price target is right. 1.5%, right? 1.5% times 2 million equals 30,000. That's where Bitcoin is trading today. Now, I'm not 100% certain that my price target in Bitcoin will be attained, but I'm way more certain than 1.5%.